Days ago, one company sold $75 billion of stock. In a single day, it is the biggest stock market debut the world has ever seen, more than double the old record. The company is SpaceX, and how it pulled this off breaks almost every rule of investing. And that number is just the start. Coming up, why a company losing billions is valued like a giant. The boring bill that quietly funds the rockets. How it turned NASA into a customer. And the one bet that decides it all. Stick around. It all connects. Here's the strange part. SpaceX is now worth about $1.8 trillion. More than Visa, MasterCard, Coca-Cola, and Netflix combined. And yet, last year, it lost nearly $5 billion. So how is a company losing billions worth more than almost anyone on Earth? The answer is not the rockets. Let's follow the money. Start with what SpaceX actually is. It looks like a rocket company, but it is really three businesses in one. Rockets, Starlink, the satellite internet, and a brand new AI arm. Together, about $18.7 billion last year, up from $14 billion the year before. But growing is not the same as earning, because most of that money is being set on fire. Split them apart, and only one makes a profit. Starlink earned about $4.4 billion. The launch business lost a bit, and the new AI arm lost a staggering $6.3 billion. Together, the core businesses lost about $2.6 billion. After interest on its debts and everything else, the full net loss was about $4.9 billion. So who is paying for it all? Meet the engine, Starlink. The unglamorous business of selling a monthly internet bill, even on a plane. $11.4 billion last year. Over 60% of all SpaceX revenue, and the only part that profits. Musk says it plainly, Starlink pays for the rockets. And one day for Mars. A boring broadband bill, funding a city on another planet. And the scale is almost hard to believe. To blanket the planet, SpaceX has launched so many satellites. That Starlink now runs about 2/3 of every active satellite in orbit. Over 10 million people in 160 countries now connect through it. But there is a catch. To win them all, the price each pays has quietly fallen. From about $99 a month toward the mid-60s. So how is a money loser worth $1.8 trillion? Because a valuation is not about what a company earns today. It is a bet on what it earns in the future. And this bet is enormous. SpaceX is priced at about 94 times its sales. Nvidia, one of Earth's most valuable companies, trades near 22. You are not paying for what it is. You are paying for what it could become. We have seen this movie before. In 1997, a company went public and lost money for years. Critics screamed it was wildly overvalued. That company was Amazon. The investors who held on were rewarded beyond belief. SpaceX wants the same leap of faith, but not everyone is buying it. One firm values it at less than half, about $780 billion. So where did that $75 billion go? In most listings, early investors cash out and leave. Not here. SpaceX sold only new shares. The cash goes into the company, earmarked for three things: AI computing, more launches, and new Starlinks. The message to the market: we are not leaving. We are just getting started. But buying in comes with a catch most people miss. Through a special share structure, Musk keeps about 85% of the votes. You can own a slice and share the profits, but you get almost no say in how it is run. You are buying a ticket to ride. Musk is still flying the ship. So why trust this company with satellites and astronauts? One word: reuse. For 60 years, rockets were thrown away after one flight. Like scrapping a jet after a single trip. SpaceX learned to land them and fly them again. One booster has now flown over 30 times. Refurbishing it costs under 1% of a new rocket. That changed the whole game. NASA's giant moon rocket costs about $2.5 billion per launch. A SpaceX Falcon 9? Around $70 million. So NASA stopped competing and started buying. It now pays SpaceX to fly its astronauts to the space station, and even hired it to land the next crew on the moon. India stays frugal. Russia has been cut off. China is racing to catch up. But today, one private company launches most of the world's cargo to orbit. And none of this came easy. SpaceX's first rocket failed 3 times in a row. A fourth failure would have ended the company. It barely survived. Even now, its giant Starship keeps exploding in tests. But that is the plan: fly, blow up, learn, repeat. They treat explosions as data. The risk, a deadline arrives before the lessons do. Step back, and the machine clicks together. It is a flywheel. Starlink subscriptions throw off cash. That cash builds better rockets. Better rockets make launching cheaper. Cheaper launches put up more Starlinks, which bring in more cash. Each spin makes the next easier, and it all points at Mars. So what are you really buying? Strip away the noise. A profitable internet business strapped to two giant bets, Mars and AI, priced for a flawless future, run by one man. And it all rests on one question. Can Starship truly work at scale? If it does, today's price might look cheap. If it does not, the dream comes back to Earth. If that made the biggest IPO in history make sense, like, share, and subscribe to Plainomics.